Today, I will be talking about prices and allocation of resources as well as government intervention to overcome market failure as a result of demerit goods in this vodcast. First, let's define several terms. Resource allocation involves the allocation of scarce resources amongst producers as well as the apportionment of scarce goods and resources amongst consumers. Resource allocation arises as an issue of concern due to the unlimited wants of humans and the limited and scarce resources available. The choices that need to be made when deciding how resources are allocated are represented in three basic economic questions. What should be produced and in what quantities? How should things be produced? And who should things be produced for? A market is a place or structure where buyers and sellers come together to complete an economic transaction. Markets can be physical places like a supermarket or a virtual place such as an online store. Parties can either exchange goods and services, or parties can offer goods and services in exchange for money. Prices of goods and services are determined in the market through the concept of supply and demand. A market economy is an economic system where prices determine the rationing of the goods and services in the economy. The amount of a good or service produced is determined entirely by the producers. There is little or no government intervention. Prices of goods and services and wages are determined by supply and demand. In general, companies are relatively efficient, and there are rarely shortages or surpluses. Consumers are allowed to make individual decisions on what products to buy given the market price, and producers are allowed to decide how much to produce given the market price. Usually, the producer's decision is based on the likelihood of profits being made. This concept is called consumer and producer sovereignty. In free market economies, consumers and producers work to their best interests. Therefore, in general, resources are allocated efficiently in market economies. In free market systems, the price system is the primary mechanism in which the scarce resources in the economy are allocated. Price is a mean of rationing goods and services. This price is determined by the interaction between supply and demand and the equilibrium point. When there's a change in the market price of a good, then signals will be sent to the producers to allocate more or less resources to the production of the good. This price acts as a signal to the actors in the market. Since most producers wish to maximize their profits, an increase in prices may be an incentive for producers to increase allocation of resources to the production of a good or service, or to enter the market. A decrease in price may send signals to producers to decrease allocation of resources to the production of the good or service, or to leave the market. For example, if the demand for a book increases because the author received the Nobel Prize in Literature, the market forces will increase the price from PE to PE1. Producers will realize that the profits earned from producing the book would increase with costs staying the same. Thus, assuming that producers are rational and wish to maximize their profits, the higher price gives the producers an incentive to increase the quantity of goods produced from QE to QE1. Producers will allocate more resources towards the production of the good with the desire of producing goods that are more profitable. This is a self-running system as factors of production are reallocated to meet the increased demand of the consumer. It is important to note that the producers and consumers have the choice of the quantity of goods produced and consumed at the given price. It is the invisible hand that encourages the producers to produce more goods and services wanted by the buyers in the economy. Demerit goods are goods and services in which the consumption is in general deemed unhealthy and undesirable due to the negative effects on consumers and on society in general. Demerit goods have harmful effects on third parties and society in general, therefore have negative externalities of consumption. The harmful effects on third parties results in the marginal social benefit being lower than the marginal private benefit. The benefit of demerit goods to the private individual is greater than the benefit to society as general. In a market economy, consumers will consume according to their private benefit. Therefore, the demand curve would be the marginal private benefit, and the non-socially optimal equilibrium price of the good would be at P1, higher than the optimal price of P star, where the marginal social benefit is equal to the marginal social cost. This results in an incentive for producers to over-allocate resources to the production of the good. Therefore, demerit goods are overconsumed. Some demerit goods include cigarettes, alcohol, and illegal drugs. For example, cigarettes are an example of a demerit good that has a negative externality of consumption. The consumption of cigarettes creates negative effects on third parties. This includes passive smoking, which may cause lung diseases, the discomfort at the smell of cigarettes, as well as the burden on hospitals needing to treat those affected by the cigarettes. As a result, the marginal social benefit is lower than the marginal private benefit. The benefit of cigarettes to society is lower than the benefit to the individual. Society consumes the demerit good at the point where when marginal private benefit equals a marginal social benefit. Society consumes the demerit good. This results in the demerit good being overproduced and overconsumed at a socially inefficient level at Q1 with a price of P1, above the socially optimal quantity of Q star and below the socially optimal price of P star. This creates a welfare loss to society. Between Q star and Q1, the marginal social cost is higher than the marginal social benefit. There are a number of options to reduce or eliminate the externality. This includes negative advertising and education, the taxation of the demerit good, and government legislation. The government may choose to use negative advertising in the attempt to reduce demand and to shift the marginal private benefit curve to the left as close as possible to the marginal social benefit curve. This reduces the externality. Shifting the marginal private benefit curve to the left will reduce the quantity to the socially optimal levels. However, the cost of advertising may be high. Furthermore, advertising and education may not be effective in reducing quantity consumed. Many young adults are willing to accept the dangers of the demerit good and are not greatly affected by the government's effort in education and advertising. The government may also choose to impose a tax on the demerit good and choose to use a market-based solution to reduce the consumption of the demerit good to the socially optimal level of Q star. A taxation of the demerit good will shift the marginal social cost curve upwards to MSC plus tax. This would result in a new equilibrium point at This would result in a new equilibrium point where the quantity decreases from Q1 to the socially optimal level of Q star, also increasing the price from P1 to P2. The government would gain significant revenue, which may be used to correct the negative externalities caused by the demerit good or to fund the education and advertising campaigns against the demerit good. Furthermore, those who cannot afford the demerit good with a taxation may be deterred from starting to consume the demerit good. The problem with this taxation is that it is difficult for the government to estimate the exact amount of tax required to reduce the quantity of the demerit goods consumed to the socially optimal level. Furthermore, demerit goods such as cigarettes, alcohol, and drugs are usually addictive, and thus have an inelastic price elasticity of demand. Thus, a tax may be ineffective in lowering the consumption levels to the socially optimal levels. If taxes are too high or excessive, people may also start to look for other sources of supply. A black market may be formed, and demerit goods are illegally sold from stocks from countries or areas with no tax or lower tax. The government may also choose to legislate and ban the demerit good completely. This would prevent third parties from being negatively affected by the demerit good. However, this would have a large effect on the industry that produces the demerit good. An example of cigarettes, the tobacco industry would be greatly affected. The employees and shareholders would be affected. Furthermore, the government would lose taxation revenue from the complete banning of the demerit good. Those who enjoy the consumption of the cigarettes will not continue supporting the government, which may be detrimental to the future of the government. Illegal markets and the illegal consumption may be encouraged with the complete ban. In general, legislating and banning the demerit good completely is not desirable due to the negative and unintended consequences involved, such as the effect on industries as well as the possibility for the increased rate of illegal activity. Therefore, I would suggest against the complete banning of the demerit good. Negative advertising and taxation seems to be able to reduce quantity, but neither is completely effective when adopted alone. Education and advertising may not be effective due to many consumers being insensitive to the negative effects of the demerit good. Taxation may not be completely effective due to the inelastic demand of the demerit good. Excessive taxation may also lead to the forming of secondary markets. Thus, I recommend that a combination of moderate amounts of negative advertising and a taxation should be used to bring marginal private benefit as close as possible to marginal social benefit. The combination of advertising, education, and taxation to tackle the issue of overconsumption of demerit goods would increase the effectiveness of solving the issue and decrease the negative consequences of excessive taxation.